Hello everyone, welcome back to my YouTube channel. Welcome back everyone, welcome back. Today we are going to talk about the US of a possibility entering a recession here. The GDP report paint a bleak picture since we have seen the GDP has been down 0.9% here. So we are really inching toward a recession, but however, when will a recession happen? There's no clear definition or no clear exact date when it will happen because right now recession is on everyone's top mind, especially with the regular American people. More companies are now laying off employees. Since we are seeing this high tense of inflationary environment, people now are paying more for the cost of goods than ever before. Right now, stock recently hit the lowest level since the onset of the pandemic when they kind of fell into a recession. Now, to add to the pain, U.S. economy contracted for the second quarter in a row. This real income and inflation is at a 40-year all-time high, forcing Americans to cut back on spend to stay afloat, yet unemployment is remarkably low. The 0.9% contraction last quarter was driven primarily by a sharp decline in business inventory, government spending, and residential and non-residential investment here, which we are seeing a slowdown in economic performance. Right now, Yellen said the economy is not in a recession despite GDP slump. However, as the Secretary Treasury of Secretary Janet Yellen said, now the U.S. might not be in a recession, but that is not what the American people are thinking or even believing until what Yellen had been saying. Right now, she had pointed out some very metric that we must take into consideration, such as when you look at the economy, job creation and continuing household finances remain strong. Consumer are spending and business are growing. She said during a new conference. But however, this GDP contraction is not what we are expecting, but we are still expecting for a loom economy ahead right here. So she stated that the U.S. economy is in a state of transition, not a recession, despite two consecutive quarters of negative growth. However, recession, Yellen is a broad-based weakening of our economy that includes substantial layoff, business closure, strain in household finances, and a slowdown in private sector activity. So that is what she had been thinking. But however, we have been seeing more companies are now continuing to trend with layoff within their business. And also they are minimizing on spending. That is what we are seeing as a result of the GDP having shrunk. Not only that, let's talk about clean U.S. inflation gas reached 6.8% at price keep surging. Right now, people are paying more than ever before. Right now, the cost of living has gone up. So the cost of goods, food, and everything which we have seen had hit our pocket. Right now, good is up. American people are asking when will inflation cool down. So the Fed right now just hiked up their interest rate by 0.75%. That is three-quarter basic point, which we are seeing when the next quarter we are expecting a more economic slowdown than ever before. Something for us to be prepared on right now. Inflation is on everyone's top mind. Also, last stuff, but not to talk about, is global equity fund record fifth weekly outflow in a row. This is a major sign of something bad happening. Even though Yellen said we are not in recession, the American people and the global investor are not believing in such incident. However, a recession is possibly high. With the global equity fund record fifth weekly outflow in a row. This is a major sign of something bad will happen and might happen in the near future. People now are less confident in the market than ever before since the government is not investing more money than ever before. So right now we are seeing more business and entity are minimizing their spending. Even right now with the fact of the Fed raising up by three-quarter of basic point, people are less willingly to borrow and to pay that high interest fee in return. Let's look at here. Investor broadly withdrew our sectoral fund with real estate, industrial, financial, and tech record outflow of $672 million, $593 million, to $538 million, and $267 million respectively here. We are seeing the European and Asian equity fund posted outflow of $2.58 billion and $0.55 billion respectively, while the U.S. equity fund drew a net of $0.63 million in inflow. Something we must take into consideration as of now, though, the market is still in a quite unique perspective, which there's still more stuff for to take into consideration and continue to be updated day by day. Thank you, everyone. See you. Have a nice day.